Good morning and welcome to the Killik and Co market update. We're at the end of another quarter, so it's a good time to reflect and to look back on market performance. Despite many years of underperformance, the FTSE 100 has actually outperformed the MSCI World Index over the last quarter. And in fact, if we go back to the start of 2021, the performance of the two indices has actually been pretty much on a par since then. If you have a look at this chart, you can see that the FTSE is actually pretty much back to where it was at the market peak in December 2021, whereas the MSCI World Index is still quite some way below where it was. The FTSE's heavy exposure to oil companies, which has been a negative for it over the last decade, has actually really helped it over the last quarter. It's really interesting to have a look at how different sectors of the market have performed over the last quarter. So here on this chart, we're looking at the S&P 500 index over in the US, and we're looking at how different sectors have performed. And this chart is measured in percentage points. So that top bar there, which shows 989 points, shows that the oil and gas sector is up by 9.89% over the course of the last 3 months. So as we said, oil and gas has done well because of that big rise in the oil price, again due to the invasion of Ukraine. We've also seen strong performance in utilities. That sector is seen as quite defensive, quite safe, and it's one that investors tend to buy into when they're a bit more worried about the wider market. We've also seen strong performance in basic materials or mining stocks, which have historically offered good protection against inflation. And then financials or banking stocks tend to do well in times of rising interest rates. At the very bottom of that chart there, we've got a weak performance from the technology sector. As we've had rising interest rates, that tends to be bad news for growth stocks, particularly technology, but the situation for the tech sector has been improving over the last couple of weeks, and we clearly have got some buyers swooping in to pick up some of those more attractive opportunities. In terms of company news this week, SSE has upgraded its guidance. SSE is a leader in offshore wind, and it's currently the greatest generator of renewable power in the UK. The reason for the upgrading guidance was an increase in wind speed, which has enabled the company to generate more power. As you can see by the chart here, SSE shares have performed very well over the last few months, particularly over the last quarter. Europe is currently pursuing a strategy of greater energy independence, so it doesn't have to buy as much Russian oil and gas, and that's likely to require a bigger investment in renewable companies, and that's going to create a good opportunity for companies like SSE. And finally this week, the Bank of England has published some data showing a big increase in credit card borrowing here in the UK. Here's the data going back to February 2017, and the level of credit card borrowing is shown by the blue bars. So you can see there was quite a notable spike last month. This is potentially indicating that some people are struggling to cover their costs of living because of the recent rise in inflation. And this could be quite a concern, bearing in mind that interest rates are starting to rise and these credit card borrowings could start to become more expensive. So we'll be keeping a very close eye on this data point over the next few months. Moving on to have a look at next week, we've got hardly any companies reporting, so we don't even have a slide for the week ahead this week. But do bear in mind that next Tuesday is the last day of this tax year, so do make sure that you have used your capital gains allowances and your ISA allowances. That's it from us. Enjoy the weekend, and we'll see you next Friday.